Hello everyone, welcome to my channel, Off-Grid Investor. This is Dolph. Today in this video, I think we'll have to talk about the CCIV again. I think we'll talk about CCIV whole time in this video. I'll talk about other the stocks maybe on the next videos, but I think we need to talk about CCIV a little bit in this video because I know many of you have click the like button and subscribe after I put the CCIV stocks and follow. You guys been following me with the trades and all that. So yeah, so let's get right into it. So the big money behind I told you the last video. I told you we'll see how they play this one. Once again, yes, they have played masterfully, and I'd like to give a clap on that one. And kind of suspected, what's going to be like on Monday, but once again, yeah. So because they tested the water on Friday, how it happened. Selling almost $1 million per, one fund, and they tested it. How they probably didn't know how low it would go, but they suddenly kind of tested the water and see. And what happened? I'm sure they had a short position already. So imagine how much money they have made on that trade on Friday. So that's why I was amazed, how they did it. But what happened? Because the news was out already for Tuesday. So everybody everybody bought it back on Monday. So what happened? The price went up all the way to even $63, and that's what I predicted. On weekends, I told you guys. So I told you guys not to panic sell this one. So I hope, many of you are still holding the shares, because if you're out of the game, you're out of the game, and especially something like this, you don't want to you like to take the profit on the way up, but something like this, the key, the strategy you want to use is you're reducing your risk on the way up and still have the shares to play with. Otherwise, you cannot play after that. And imagine somebody putting the stop loss or something, and I'm sure if it dropped a lot on Monday after hours, and even that think how wonderfully they play this one, the big money, after it's news came out, they put the news out after hours. I'm sure they had a short position, they have made a triple, quadruple, or if not even more. I can think of lot of money that I'm sure they have made on this one, this trade, because I can see they can see how popular this stock is. They see it as easy money for them. But anyway, so we'll have to go with whatever how the price the reacts now. As a small investor, that's all we can do. So let's talk about what kind of strategy we can use now. So some of you are still holding the shares. You'll have to ask yourself what price that you got in. So some of you who got in around $35 range or $40 range, I'm sure you're still feeling comfortable with it, especially I've been telling you not to put too much on the stock play like this. That's another reason I've been telling you. Now the prices went they went down. I wouldn't put, if you have invested from $35 or $40 range, I wouldn't necessarily put more the money in there. But I can definitely see there's a lot of the selling down pressure right now. So and as I look at it, the next bottom support that I see is around $27, $27.50 or so. So personally, if it, myself, like I wouldn't add it up and anymore the shares. But if it goes under $30, that'll be very tempting, in my opinion, because once the companies start the rolling out their delivery, they say there's like first delivery like they're planning on like this summer coming. But think about it, like at the end of the year, or even like the first quarter, like if they double, like maybe first delivery will come out like what, like maybe like a couple of thousand or a few thousand, and then if they can keep it up and make more deliveries, at least like a little bit, like maybe even like 30% or 40% more, like the following the quarters, I can definitely see this the stock can fly way above $70 or $80. This one can actually even go even like the way I see it, like it can even go to the more than $100. I can definitely see that. But let's get rid of that, the possibility for now. So as a short term, so now what we can do, you can double it down, like when the price goes maybe like around $27 range or so, and if it goes even more like $20 range, I'll be tripling down on this one. I can tell you that. But I mean, who would think like this will go even below $20? I don't think that's gonna happen. So it is a good opportunity. It is there now. So this is something to think about. But for those of you who bought maybe around $60, I don't know why you would do that. But like $60, I told you, like it may go like to maybe 70 or 75, but I don't know why would anybody would do that. But I mean, let's say you bought it at 60, then doubling down would be what, like around what, like $47.50 or so, yeah. And then if you triple, if you triple down, like right at this, the price range, $35, or if it goes even like the below 30, that's when I would think maybe tripling down. Then what your price average will be like low 40s, like we're talking about $43. Or if you add triple down, like around like close to $30 price range, it'll go down like we're talking about like even $39 or so. So what would you say? Is that the comfortable like price range to hold it for like a year or so? I think so. Yeah. So that's the kind of like the things, like don't lose the money on the like the trade like this. Like the Facebook, like you want to cut the price range, and especially the day that you put it, and if it ends up the green day, you have that much the cushions, so you swing, if you kind of like swing trading the Facebook, like Facebook or so, that's when you want to put the the cutting cut loss, the lines, not to lose any money. But something like this, you don't want to put the cut loss, because the price can drop, like huge up or down, and like it happens every day. So that's lesson number one. Hopefully, like a lot of you have experienced that. So now, what's the another strategy? Maybe we can use. It is I can think of like using the option chain. I think I did mention about this. So if you have more than 100 shares or so, now that you can consider like the selling, the cover calls. But I wouldn't go too much further down the date, because imagine like if after the summer or something, if it shoots up like to like the $90 or so, like let's say like you put the strike price, like right now she said 35, so I wouldn't think like anybody would like put more than like 40, the 40 or 45. So think about that, then if it goes up that much, you're not making all this profit, because you have to sell your shares, even like 100 shares, that's not good. But like I told you, there is a lot of downside pressure right now. So if you choose the strike price, the close to the current price, I have feeling that there is a good chance you will not hit the strike price. Then you win-win. You get the you just keep the premium. So that's a good way of the doing it. So whatever you make a little small money or whatever, save that one for the buying more share of the CCIV later. It's like adding it up more, like especially of course you'll buy like when the price is going lower. And another the strategy I can think of is like also using the selling secure the cash put on this one. But also this one, there's like, if I don't know, like many of you who are watching this one may not be able to cover that much the money. So I don't know, like, but if you can, that's a great the strategy you can use. So this one also, I wouldn't go too far down the road, but maybe like the end of March or the April or so, so put the like the strike price a little bit lower than the current price, and if it goes that below, like also you get the the small the premium as well. But if it goes down to that strike price, you get to buy the more share of that your preferred the price range. So I think that's a the good way of doing it. And if you say like, oh, I don't have any of those money to trade like that, then consider also like credit spread or something. But the downside is that like I know like many the beginner trade may watch this one. You need to be careful with the spread. I mean, you need to know what you're doing. So like if you just like hold it through, like if you make a little bit money, just cut the option and take the profit. And I recommend to sell it, like before you get executors, the making sure that you're taking the profit. But the good thing is you're investing just a little bit of money. But the downside is, you're only getting like the only small, the limited, the profit though. But that's a safer way of, the thinking, to think. So this is something I wanted to mention so that you know what you can do. So like I told you, personally, at this point, what I like to do. So like right now, it's sits at $35. So you ask yourself, like what price that like you got in, and like ask yourself like, do I really want to hold this one, because for next at least like what year or two. I personally like this stock and I do want to own the stock and I do want to keep it more than a year or two. Of course, there's a chance this might go bankrupt, just like how the Tesla have experienced when the price was like the $70 or $80 or something back in 2016 or 17, I think, that almost went to bankrupt. But this may not be this the same, because like all this the managing the staff and all that, there are a lot of them from the Tesla and all that, and so I hope maybe a lot of them they have experienced what the Tesla have gone through and all that. So and also, the Tesla at the time, it was just Tesla, so not many delivery and not many people were not quite sure about the company and all that. But now it's like like Neo, Xpeng, Tesla, all this, the companies, rolling out the EV, and I can name like 10 or 15 more like the companies that they're making EV cars. So that this is completely different, the time, the time frame. So I really do like it, and I would buy more shares in my opinion. But I have to mention, none of this financial advice. I'm not your financial advisor. This is entertainment purpose only. So please do your due diligence. But I wanted to, shout out to y'all and share my thoughts on this one at this point. So like with those, the little strategy, like you can use. So good luck to y'all. And today the market is a hold down. My portfolio is quite red, but I don't think there is something to worry about if you're investing in it for long term. So everybody, please choose the company that you love or like, and invest for the long term. And that's what I wanted to say to everybody. So good luck to y'all, and I'll see you in the next video.